Alright, so I know what you're thinking. Monday, usually the bi weekly forecast comes out, and it's now Tuesday. My apologies, guys. You know what? I sent out a video, I believe it was either Saturday or Sunday, in regards to. Hold on, I just need to put my charger on. In regards to the NASDAQ, and usually the bi weekly forecast comes next. Anyway, guys, as always, I'm here to deliver. So, my priority is to make sure you guys are still on the right side of the market. Welcome back, guys. Welcome to the bi-weekly forecast for the third week running. Today, we're going to be looking at three pairs which I consider this time either hot in the market and three pairs that should be top of our priority for the week. Now, the first pair we're going to look at is GBP JPY. Now, before I get into the thick of things, I do want to outline the fact that GBP JPY is a trade we have taken in the members insight group. We are currently in profit, around 110 pips in profit at the moment, and we are looking at 1354 target. However, we may consider closing trades earlier than that if we consider the current developments of the market. Now, if we consider the market in its current form and current state, then we have grounds to make a case for a bearish move here. Now, currently, the current structure of the market does outline or is bearish, just to say the least. Now, the reason why we're bearish is quite simple, and it doesn't take a functioning brain cell to see why the market is bearish here. If we go into the weekly time frame, automatically we know that the current structure of the market is bearish. We are creating consistent lower highs and lower lows, and I consider this current corrective sequence, which is a zigzag correction as wave X and a flat correction to terminate wave Y, is the current sequence of the market. Therefore, we can determine this to be the end of the sequence. Because of this, and because price did terminate at the 382% and close below, I believe we have started a new cycle sequence to the downside. Now, my target for GJ in the near term is definitely 117 and 105. Ultimately, if we return this back to its original placement, and we're going to freeze you right back onto the full screen, ultimately my longer term target for GJ is around 90. So it's 92 820, or just 90 in general. So this is a big feat from the current price level. So swing trading this, of course, isn't going to be as swift as we expect, but we are looking for a direct replica of the previous wave that did take a span of around a year to complete, or more than a year to complete, nearly 2 years to complete actually. Actually no, it was a year to complete. So we're looking at the previous wave, which took around a year to complete. This doesn't necessarily mean that this wave is going to complete in a year, but it does mean that we're going to see a replica in time, or at least form. So we can expect a sharp drop to occur here. Now, GBP JPY is definitely a hot pair, 100% hot, right? So because it's hot, and because we can expect some downside, again, going to the daily, you can see the structure is still bearish to an extent because it's hot. Now, going to the weekly, for hourly, we can see the current sequence in the market as corrective, right? And as you can see, the current sequence market is bearish. We broke out this bearish channel, we've got multiple retests, and we're now retesting the high, upper high of this channel here. So we're now looking at 134 as our target. So 134 is now our take profit for GPJPY, and after we see a test of 134, we will definitely be looking to short this market. So what we're looking at here now is this structure, right? So we're already in this trade, but what we are now initially looking at is a test of this structure and we are looking at a nice move. So what we want to see initially, if we go by Fibonacci, we would like to see the likes of 126, 125, right? 126 is definitely a reasonable target, and that gives us an 800 pip range, right? So this is 800 pips that we're looking at most definitely going forward. So considering we do get this move, this definitely sets us up for a nice move on GPJPY, and at the same time we don't have to risk a lot either, because we know this is a corrective channel here. We could still see a spike to the 50%. I believe now it's very unlikely. Chances are we'll see a test of the 1 or maybe even the 382. So our confluence zone is now this level here. Considering we see a retest of the 382, then yes, we definitely have more room, I guess, for not just error but entry. So this is one of our pairs on the watch list. So a lot of people, when they look at the market, they see no directional movement. Again, our form, when we break it down now, looks a little bit like this, right? So we predicted the end of this corrective wave, and this is how we predicted how wave Y was going to develop, because we've been tracking this, I guess you can say, market wave by wave, and because we have been doing this, this has allowed us to stay well ahead of the market and well ahead of the curve, in comparison to the majority of the market participants, and this is why we've been able to profit the way we have. So because of this strong move, our new take profit is now here. We can delete one of these. Our new take profit is now here, and as you can see, the 1 does definitely reside around 134. So that's why our new take profit is here. We can also maybe expect to see the 382, but then again, let's see how things develop first. There's still a chance that we could see the 50%, so we can't really rule that out either. Either way, we can definitely expect some sort of resistance, providing we do get a retest, or we do get maybe a test of the 382, and in rare cases a test of the 50. Then yes, we will be looking to short this market, most definitely. And that brings us to our next pair, right? So our next pair is GBP CAD, right? So getting into GBP CAD first and foremost, GBP CAD is definitely a pair to watch because the cycle remains to the upside. Now, previously in the premium, we was looking for a retest of GBP CAD around this price level, if I mark it out, for a move higher towards 185, 186. Unfortunately, this didn't come into fruition, and that's forecasting. Forecasting at the end of the day is a guessing game, right? And because it's a guessing game, sometimes your forecasts will come into fruition and sometimes they won't. And because of this, you need to be attentive and flexible to how the market moves. So in regards to GBP CAD now and where it's at in the current spectrum of things, we can still make a case for the market being bullish because of this corrective structure here. For me, this corrective structure does print a zigzag pattern. Could we make a case for a contracting triangle? Of course we would. However, by, I guess, Fibonacci terms and equality, we would probably need to see a steeper drop in GBP CAD before we can even see such a rise. This is why I'm still favoring a rise towards the 1 or the 618. But then again, we can't exactly rule out a possible move to the downside. Now, the case comes here in reference to what's happening on smaller time frames. For me, we have completed a WXY double zigzag pattern for wave W and an X wave expanded flat as wave X, which is ABC, has not been marked on the chart, by the way. Now, I believe this to be the intervening pattern for the first wave, hence why I believe we could see some sort of, I guess, ABC pattern wave occur here, which kind of invalidates the possibility of a triangle if we consider this an X wave. And should this happen, of course, again, we can make a strong case for a rise in price here, which is what I'm expecting. So providing we see a retracement to the 886, then why can't we see a big bullish rise in the CAD here? And there we definitely have means for this kind of move to occur, especially to 185 or 186, which would obviously be replicated in the likes of USD CAD and maybe Euro CAD in that case. So providing this happens, what we're looking at is a retracement to the 886. Of course, if we go into the far, in fact, we need to return that. So what we're looking for is a retracement to the 886, and we're looking for a completion of the zigzag towards 166. Keep in mind we can still breach the 886, but we're looking for a daily closure above the 886, and of course we can't breach the low of wave X here, otherwise this completely invalidates our perspective on this market. Again, this is a very long corrective sequence here, and we can still very much rise, which is what I want to see before we fall. I would like to see a rise before we fall here, and this would make give us strong grounds for a move here on GP CAD. This would obviously see ripple effects occur in the likes of CAD JPY and maybe CAD Swiss franc, but again, we want to see this come to fruition, especially if you're looking to trade at this market the way we are. So providing this happen, guys, then we have grounds for a move here, and a very vicious move to occur. And this brings us to our last and final market. Now, I know you guys love to speculate on gold. Everyone loves to speculate on gold, which is why gold requires great attention. So looking at gold, first and foremost, let's look at the weekly time frame. Right, because all our forecasts and all the forecasts that are being done is based on the wave principle. So I may have mentioned this before, but we need to remember that the previous wave to the downside, when the market topped in 2011 and when the market bottomed in 2015, developed in a 5-wave sequence, with wave 1 being a 5-wave impulse, with wave 2 being a double free correction, which is a flat, a zigzag, and a zigzag. Right, we had a wave 3 decline and a clear 5-wave sequence. We had a wave 4 sideways correction in a triangle, and we had a wave 5 ending diagonal, very clear ending diagonal, and we had a very clear breakout. So we had the first wave higher, which labeled wave W in the double zigzag. We had the second sideways correction in a triangle with a wave X, as we had a simple A, B, C, D, E contracting kind of phase. And we're in the final stages of the last Y wave within this double zigzag. Of course, we are looking at the final 886 level, which is a demand level, a very strong level at 1800, and we're looking for price to sell off here. So providing this does happen, then we have all grounds to expect a nice steep sell-off. Now, just because the 886 on the weekly resides here doesn't mean price is automatically going to stop at 1800 and then reverse. We could very much see a breach of the 1800 level towards around 1810, 1820 before a fall, and we can very much see a smaller degree ending diagonal form here. So providing this happens, we kind of need to take the patient approach, but when it does occur, there's a very good opportunity on gold, in my opinion. Again, this is a bearish scenario. If price does, of course, breach 1924, then yes, we can be bullish, or we can maybe consider a different corrective pattern occurring here. Nevertheless, as price remains below that level, we can very much keep this viewpoint intact. Going on to the daily time frame, again, fairly simple. Price has breached this channel. You can see the multiple rejections. Price has just breached it, but as we continue to move on down, into smaller time frames, you can see how price is subdividing into smaller channels here. So again, considering the recent breakout in gold US dollar, we saw price, I guess, reach 1785. Now I am sticking to my bias of 1810. We can still see a spike to 1820 as long as we remain below, again, 1924. I am still very much bearish on this market overall. So providing we see some sort of recognizable pattern here, could see a sideways consolidation before we move higher. We very much could see that, but as long as we I guess maintain the structure here, yes, I am very much bullish in the short term. But nevertheless, this pair should remain on our watch list, not just for this week, but for several weeks afterwards. And I hope you guys are benefiting from this, because a lot of people, they might just watch the video and then might forget, it's just another video. But most of our forecasts have come through. So if you haven't been paying attention, I suggest you do, for your own benefit, of course. And that wraps it up for this bi-weekly forecast. So we looked at GBP/JPY, we also looked at gold, and we looked at GBP CAD for potential movers this week. Again, trade these pairs at your own risk. These forecasts are just my viewpoint of the market, and it's there to help you navigate the market and give you a different perspective of the market when it comes to making informed trading decisions. Remember, trading involves a lot of risk, and you should never be investing with capital, especially that's important to you, and you should only be really investing in capital that you can that you're willing to lose at the end of the day, unless you know what you're doing, of course. And that wraps up for this week, guys. I hope this video was beneficial. There will be more, and I will continue to deliver the bi-weekly forecast every week, and I hope you guys have benefited all the same. That's all for now, guys. Take care, and I will see you next week for the next bi-weekly forecast.